Did you know that the IRS considers your hobby income taxable even if you're not running a business? Some taxpayers are unaware of the tax rules surrounding hobby income, which can lead to surprising financial and federal income tax consequences. So, we're going to take a look at the tax consequences of earning income from your hobbies and why it's crucial to understand your obligations. We're going to explore the difference between hobby income and business income, discuss reporting requirements, and go over examples to clarify the concepts. Also, as a former IRS auditor, I'm going to go through the checklist of things that an auditor usually examines to determine if an activity is a business versus a hobby. Now, I'm not giving you tax or legal advice, so please consult your own tax, financial, or legal advisor for help with your particular situation. If you're making money on an activity, you always have to report the income no matter what, even if it's a hobby. The reason that many taxpayers want their activity classified as a business is so they can deduct expenses. Under the current tax law, if the activity is a hobby, you can't take any deductions for expenses, but you report the income from it on Schedule 1 of your 1040 federal tax return. For example, if you bake cakes and cookies and sell them during the holidays and this activity is classified as a hobby, you would have to report the income to the IRS, but you can't deduct any of your expenses for things such as flour, sugar, or cake boxes. This also means that you cannot write off or deduct any assets that you purchase for your baking activity. This includes your pans, mixers, and anything else. The current tax law regarding hobby losses is set to expire at the end of 2025. If this law is allowed to expire, we might roll back to the old tax law. If we go back to the old tax law, you would be allowed to take deductions for a hobby up to the amount of income received for the hobby. So after 2025, this would possibly mean that you could offset part of your hobby income, but you would never be able to take a loss. Even then, though, the deduction for expenses would be a miscellaneous deduction that would be allowed only to the extent that the deduction exceeds 2% of your adjusted gross income. Adjusted gross income is all of your income, including your W-2 wages, minus adjustments for things such as retirement contribution. Another benefit of being classified as a business is being able to take a qualified business income deduction. QBI can give you a deduction of up to 20% of your qualified business income. The QBI deduction flows through to your personal 1040 federal tax return. It is subtracted from your taxable income to make it lower. Let's go back to the baking activity example. If the activity is classified as a business and the net profit from it is $120,000, you would calculate 20% of the profit to get $24,000. Then if your total taxable income on your 1040 tax return is $150,000, you would calculate 20% of that to get $30,000. Then you would take the lower of the two calculations. So you would get an additional deduction of $24,000 on your personal tax return. Now, that was a really simplified scenario. Of course, there are all kinds of rules and it's a bit more complicated than this. So if you're interested, I have a video with more details about the QBI deduction. Although most taxpayers are concerned about being able to take deductions, being classified as a business has its downside as well. You will have to comply with filing and information reporting requirements. This means that you will have more forms to fill out because you will have to report ownership information for your business. Also, you might have to issue 1099s for payments that you make to other people or companies. You don't have to issue 1099s if your activity is a hobby. Being classified as a business can result in having to pay additional taxes, such as self-employment tax. So if your activity is a hobby, at least you don't have to pay self-employment tax since hobby income is not business income. If you're engaged in an activity and make a lot of income from it, but you have very little in expenses, you might want to check with your tax advisor to see if your activity qualifies as a hobby. In this case, you might pay less in taxes overall since you wouldn't have to pay self-employment tax. Currently, the self-employment tax rate is 15.3%. Okay. That leads us to, what does it take to be classified as a business versus a hobby? Although hobby versus business tax law is based on all the facts and circumstances, an auditor would start by looking at a couple of basic things regarding your activity. First and foremost, your primary purpose has to be to make a profit. If you don't make a profit in at least 3 of 5 consecutive years, an auditor might presume that you are not engaged in the activity for profit. Also, you must work on the activity on a regular and consistent basis. It can't be something that you do occasionally when you have free time. So if an auditor thinks that your activity is just a hobby, the auditor would look at other factors as well. The auditor will analyze your activity to determine if it's just for recreation. They will look to see if you have had any success with a similar activity. The auditor will check to see if you're an expert at the activity and if you have anyone advising you. The auditor will check to see if you're running it like a business. If you have made any profits, they will check to see how much and compare that to your history of income and losses. They will look at your financial status because this could possibly indicate that you're trying to offset some of your W-2 income against hobby expenses. And again, the auditor would look at the amount of time that you're spending on the activity. The basic takeaway here is if it looks like you don't have a profit motive or you don't work on the activity on a regular basis, the activity appears to be more of a hobby instead of a business. I hope this helps. And if you want to know more about the 20% qualified business income deduction, or QBI, please watch the video in the upper left of your screen. If you want to know more about the business owner reporting requirements, please watch the video in the lower left of your screen. See you next time.